This is your tech news briefing for Friday, July 8th. I'm Zoe Thomas for the Wall Street Journal. For years, there's been a debate about whether cryptocurrencies should follow traditional financial regulations, with many regulators arguing they should. Here's Securities and Exchange Commissioner Gary Gensler speaking on Yahoo Finance about crypto earlier this year.
If you're raising money from the public, and the public's anticipating some profit based on the efforts of those folks raising the money, that comes within the definitions of a security and the securities laws. And it's kind of straightforward.
Most crypto issuers, exchanges, and platforms, meanwhile, say digital currencies and other financial products built on the blockchain don't fit into traditional regulatory frameworks and shouldn't need to follow those rules. And for the most part, the crypto sector has gotten its way, with regulations few and far between. But as the crypto market struggles and the values of some digital currencies drop to zero, it's highlighting just how exposed crypto investors are. The crypto lender Celsius froze users' accounts, and another lender, Voyager, filed for bankruptcy earlier this week. Its website says the crypto on its platform is not protected by the government. Joining us to discuss the current state of crypto regulation and where things may go next is Wall Street Journal financial regulation reporter Andrew Ackerman. Hi, Andrew. Thanks for being here.
Sure thing.
So, Andrew, I mentioned Celsius and Voyager. They're the big names in the news right now. There's no safety net for investors, but given the shock of how quickly this has happened, do you expect regulators to step in?
No, we think that that's pretty unlikely, and our reporting indicates that it's very unlikely that the SEC would try to step in here. And, they have some tools, if there's a broker that's failing and they believe they want to prevent the money from being taken out of a broker-dealer and moved somewhere else, they can go to a judge and ask for an injunction, some sort of emergency legal maneuver to stop the customer money from being moved around. Our understanding is that's not going to happen in this case.
So if customers do lose money, do they have any recourse to go after these crypto firms?
Sort of. They could sue the companies involved, the lenders, the crypto platforms, and they could say, hey, we were defrauded here. And, if the company goes bankrupt, they'd be in the line with other creditors. But there isn't a requirement that these firms, because they're not regulated at the federal level, or at least not the way banks are or broker-dealers, there's no requirement that they segregate customer money, and there's no insurance from the FDIC or through SIPC, which basically insures customers of broker-dealers. So it'd be a long legal fight for them to recover any money.
Okay, so let's talk about that lack of regulation. A lot of new industries argue they don't need to be regulated, but how does that argument look now, given the situation with crypto values dropping and with so many customers losing, a lot of money?
I think it's hard to say we're not a security and then come with your hand out asking for some type of bailout from the government. And I think it's hard for market regulators like the SEC and CFTC, which actually have investor protection mandates as part of their missions, right? At least in the SEC's case, their mission is investor protection. And it's probably hard just to watch a bunch of customers lose their shirts, and it's sort of an I told you so moment. But these crypto companies, they don't have ties to the real world economy, really. So, in the 2008 financial crisis and in 2020, when the government basically shut down the economy, there were stampedes out of certain corners of the mutual fund industry, out of money market mutual funds. And they were destabilizing because those funds had ties to thousands, millions of households, businesses, corporate treasurers. So the federal government was sort of compelled to backstop that industry. In the crypto space, you don't have that.
Okay, so there might not be the same chain reaction on the economy that we saw with other financial crises, but there is this I told you so moment, like you said. Regulators have been calling out, this lack of a safety net in crypto for a while. So why haven't they taken any steps then to secure it, to make sure that customers did have protections?
I think it basically boils down to DC moves really slowly. The regulators, the relatively new SEC chairman has come in and has wanted to assert jurisdiction over this space. He's encouraged the crypto lenders and platforms to come in and register with the SEC. They have by and large not obliged him. And, for whatever reason, Congress has moved slowly as well to kind of set up a regulatory regime to bring some of these entities within the regulatory perimeter. And I think it's fair to say that Congress has not done anything to make the crypto companies want to line up behind the SEC and to be regulated by the SEC. I think they have a sense that, maybe if they wait long enough, they might have a friendlier, Republicans may control Congress next year, and they might have a group of lawmakers who favor a lighter regulatory touch. And so that's kind of the dynamic.
I mean, that's the slow-moving world of politics, but in the fast-moving world of the finances of crypto, things are kind of falling apart, particularly, for some customers, for some investors who chose this. Is the situation going to put any pressure on Congress or regulators to act now?
I think that's a really good point. That's the concern, right? That the SEC has had for a while, that, you guys can deliberate over stablecoin, run risk all you want. But in the meantime, there's this enormous growth in these extremely risky assets, and people are going to lose their shirts. They're going to be harmed. They're not going to be able to get their money back. And it's kind of an open question if that does provide some sort of impetus for Congress to move faster. I mean, we spoke to David Portilla. He's a partner at Cravath, a law firm in New York, who basically said that Congress doesn't typically act unless a lot of retail investors are harmed. And you are going to see that here, or you are seeing that here.
All right, that was our reporter, Andrew Ackerman. Thanks for joining us, Andrew.
Thanks so much for your time.
And that's it for Tech News Briefing this week. Our producer is Julie Chang. We had production assistance from Ariana Asparu. Our supervising producer is Chris Sinsley. Our executive producer is Kateri Yocum. And I'm your host, Zoe Thomas. Thanks for listening and have a great weekend.